the Smoke Lounge, room 420.
Smoke lounge.
The homie.
I'm back.
All right. We're going to feel a little medicated. So, I guess we can start off today with stuff that's already been in the news for what, like a week or so, maybe even longer. You'll know more about it. Like GME, GameStop.
Oh man.
So, what did it close at? Do you know what it closed at today?
I mean, I didn't. And I just to preface this, I'm not a financial advisor. This is
Yes,
just
we're
what I
not we're not
do.
giving any financial
Yeah.
advice.
Do your own due diligence. Don't listen to me. But me personally, I honestly kind of really haven't been checking it as far as the raw price. I mean, I don't plan to sell. I plan to hold like forever, just cause.
Just see what happens.
So yeah, I mean, regardless, I'll just hold. I own some of GameStop now. Who knows? But I haven't really been. I have not been following the price because I'm holding. I really don't feel like it's in a way healthy to check the price every 5 minutes. Especially
So I'm not
especially
being
right now.
healthy.
Well, especially right now, you know what I mean? Because like every time you're checking it, especially this week, you've seen it's been going down. When I looked today, I think it was at 92 when I looked. Um, but I haven't. That was about three or so this afternoon. I haven't looked since then. Um, but you know what I mean? Like you don't want to be looking at something like that every 5 seconds, especially when you've come down from a couple days, because all you're reminding yourself is that you're taking a loss, you're taking a loss, you're taking a loss. Um,
True,
and you
but
don't want
but,
that to
but
grind
like
on you.
like you and I talked about, like even when I bought my one share at like 88, and within like 5 minutes, I was like, hey, I already
Yeah.
lost $7. Woo!
Right.
And because I went into it knowing I'm probably gonna lose money.
Right.
But I was doing it just to be an asshole.
Right.
Uh, that's exactly what I was like. I said, I want to be one of those assholes that sticks it to the man. Why not? Fuck them. They've been doing it for years.
Right.
We can
Right.
do it back.
Exactly. We do it now. Now they're mad about it. Like,
Yeah, because you better understood that, because I didn't know about. I knew there was always stock manipulation. I always knew that, but I never knew like how that works. Now, do you better understand that than I do? Correct?
no, I was actually going to say, to be totally honest with you, I'm not really a math person. I follow the companies, for instance, I'll follow companies, um, and their products, their development, their R&D. But this was something of kind of a mathematical catch. And my basic understanding is that they were shorting a stock, so they were going to short it, but they were shorting it in a way that was a naked short, blatant naked short, which is illegal.
Okay.
And basically, they got caught doing it. Somebody noticed the numbers were off, and kind of put two and two together.
Yeah, because weren't
Um,
they shorting it more stocks than the company even had?
I believe so. I believe
And
the
not to say
float
that
was
you
in the
can't get more
150.
stocks. Not to say the company can't create more. And I found out recently, companies
Right.
can they can print their. It's not printing money because they can print their own stocks as
Right.
many as they need. But my understanding when what you just said just clicked something in my head. What I heard was that's where the problem came in. Was like, they're like, well, how are you shorting it more stocks than they even have out there? They,
Right. And ideally, when you do that, like the idea is that you're gonna buy it back at a lower price.
okay.
But once somebody kind of put two and two together and really looked at what was happening and gave their reasoning and their evidence, some other people realized that you could make a lot of money and they could lose a lot of money because the whole bet is in that you're going to buy your stocks back at a lower price.
Right.
Um, but if that price is way above what you anticipated,
Mhm.
you still have to buy it back. You have to fill your contracts. Um, but you're going to now take a major loss, especially with GameStop, for instance. If we use the high point, of I think it was last week, somewhere around 480.
Higher. Actually, it
Was
closed.
it?
Yeah, it closed at like 500, 501 one
Oh,
day.
damn.
Yeah. Yeah.
So
And I
yeah,
don't know if
so we use
no
500.
correction. I don't know if it
Yeah.
closed at it, but it did hit it.
Right,
It
it
did
did hit
hit.
it.
It did hit
Yeah,
like
I know it
500.
hit it. I don't know if it closed at it. I had thought it closed at like 490 or something.
Right.
But in any case, if we look at when this was originally brought up, it looks to be about a year ago almost. So, you looked at the GameStop
Yeah.
stock, and up until very recently, it was in the $10 to $15 range.
Yeah. Yeah. And
Maybe like 20.
their 52 week low when it was at the $15 range was like $1 something, $2 something a stock, a share.
Yeah. So if you're anticipating buying it back at $20 and it's now $500, you have taken an incredible loss. I mean, I'm not great with math, but that's well over, that's like in 1,000%. That's not a good day for you.
Right. And because, mind you, these are hedge funds and big companies and big wigs, they don't buy like we buy. They don't buy 100 shares. No, they buy like 1 million shares, hundreds of thousands of shares. I know that some companies will have like 1 billion shares like out there total. And so I know these big hedge funds, they buy like that. Am I not?
Right.
That's correct. Is that correct?
That is somewhat correct, and I think there's a lot of other options for them. And again, I'm not really on that. It's the real details and financials of
Yeah.
the math that I'm not sure on. But in general, they just tend to have more available options, and because of the nature of what they are, they're not retail investors. They are corporate entities or hedge funds. They also have a lot more capital to play with.
Right.
They have a lot more money to play with.
And
Money that
it's
you
not their
or
own.
I or the average person doesn't have. And for instance, that allows them to play with even more. Like you or I can't get a loan for $1 billion.
Right.
They can. Um, so, and part of where you're saying it hit real high, I think it hit up to 500. You said, right around when it got up there, that's when things kind of went off the rails.
Yeah.
And retail investors, basically people like you and me who are not representing hedge funds or other corporate interests of that nature, um, on many platforms found they could no longer trade. Now, the stock market had not halted the trading of this stock.
Right.
It was just suddenly unavailable to them. And
So
there
these
were a lot of
applications and sites were they were forcing, they basically changed their system so you couldn't buy stock. Is that is that what it was? Because if I remember, they were trying to force the price down, but I couldn't understand how they were trying to force the price down.
so those are kind of two different things. Let me just talk about what exactly happened as far as the retail investors.
Okay.
So for them, there are a couple conflicting reports, and the thing is, Robinhood has taken a lot of the heat. They're kind of the big name out there.
Right.
But there are a lot of other platforms that are available, and it seems like some of them, could only sell. They couldn't buy. Some of them could do neither. Some of them could only sell and or buy one share at a time.
Right.
So there seem to be a lot of different reports out there about what app was experiencing what. I know the subreddit Wall Street Bets, which is where this whole thing originated, that has a lot of posts from different people explaining their experience with their app, whether it be Robinhood or some of these other ones. I use Fidelity. I did not have any issues, but in that realm, Fidelity is definitely considered to be one of the bigger players, whereas Robinhood is newer and by comparison a bit smaller. So well, you'd have to go through there. There's a lot of testimonials, and you'd have to do due diligence and cross-referencing posts to see the legitimacy of them. But they are out there.
Right.
There is there are reports and screenshots of it out there. And the thing is, the market didn't halt the trading.
Right.
So that's really what angered people. That's kind of what made the whole thing take off, is the retail investor, the average person, you or me or your family members, they couldn't trade. And thus, they were locked out of that market. But the hedge funds in the background seemed to be able to still trade.
Huh.
Or again, if you were on some of the bigger platforms, you could still trade. So that is why I believe it's February 18th. There is going to be testimony in Congress by the Robinhood CEO. A very unfortunate side effect, and I actually just recently found this out. So just to kind of go back a little bit, this whole thing started about a year ago with a username. I believe it's DFE. We'll call him DFE. And he posted his kind of hypothesis and his evidence. A lot of people laughed at it. A lot of people were like, "You're nuts." But he was like, I'm going for this. I'm gonna stick to it. And basically, up until like October of last year, people were kind of like, yeah, whatever. This guy's, it's Wall Street bets. Like you're here to lose money and look like a fool. That's the whole idea. Um, but then some other people, basically, the post kind of like other people looked at it, and it kind of picked up steam. And then it really started to pick up steam. Again, back then it was $20. These guys go in at that, looking for a little bit of a return. Suddenly it's 50. So it starts getting more attention. But the same data he used to kind of guesstimate that this would happen said that it wasn't over. It should keep going up. So more people kind of hop on the train. The whole thing snowballs until you reach what was it? I believe last Thursday.
Mhm.
Which is where it hit its high, and all these apps cut everything off, and then everything kind of went to hell. The real unfortunate side effect of this is, given the exposure it had, given the media publicity it had, DFV has unfortunately actually been kind of unmasked. So the New York Times ran an article on him, where he's from, what he actually does. His picture is all over the internet now. Which again, I personally think is not only really unfortunate, it might be dangerous to him in the
Right.
sense that if they were to attempt to come at him from a regulatory perspective, if those hedge funds really wanted to get somebody for this, he
Right.
would be the target.
Right. He would
And
be the patsy.
yeah, he would be the patsy. He would be the one that, the manipulator.
Hmm.
But he's just a guy on a subreddit who posted his guesstimate and his ideas. And I mean, again, you can look at the history. He was called crazy at the time. This is nuts. This has never happened. So, but he is actually gonna go, I believe, on February 18th.
Okay.
He's gonna testify as well. Which, I mean, once he's kind of been revealed to the public, you might as well truly tell your side of the story. But I believe February 18th, the Robinhood CEO and DFE are supposed to testify. I don't know who else would be involved from any other organizations outside of the Congress men and women themselves.
Yeah. So
Oh, so the second piece to that you had asked about the artificial lowering of the price. Now
yes.
this is where I want to be very careful, because I have a very poor understanding of general
And these are just
financial
our
mechanisms.
opinions. We're not financial advisors. We're not giving advice.
Yeah.
We're guessing ourselves.
Right, but I mean the mechanisms of how it actually works. So
Oh,
my general understanding is that the lowering of the price is what's called a short ladder attack, and that's basically the idea of trading many, many stocks within yourself. So a hedge fund trading it back and forth, right, to each other.
two hedge funds going back and forth.
Right. That's just an example. Or two entities. You just say two entities in the background with large amounts of them trading large amounts back and forth, in an attempt to make it look like people are selling, but they're not
Oh,
really selling. You see what I'm saying?
yes.
Those entities aren't really selling it. They're just kind of shifting it around.
Yeah, they're moving it around. It's a shell game.
Right. So it looks like so it looks like the stocks are actually selling. And once the impression is given that they're selling, then the retail investor or the uninformed, or really kind of common sense, the stock's going down, sell while you can, and that'll push it further down,
Right.
because more people start jumping on the train. The more people jump on the train, eventually you can stop doing that in the background, but it doesn't matter. You've built up the momentum because
Right.
people were afraid.
People,
So, and then
that's what people are focusing on, that number, and they're basing that the company's success or failure by that number. Where I gotta buy more shares. Um, but yeah, that's what happened to me. I don't know what we just fell down that wormhole. I don't even know where we
right.
started.
No, I got you. So that's actually kind of a good example, because you can't do a short ladder attack like in that manner on a stock like that, because it's a long term. This kind of thing only works in the short term, which is what that's the whole thing with the GME, is they were shorting the stock, and eventually those contracts come due. So there's a time frame that they can operate within.
Do you know what the time frame is? Is
My
that public
understanding was
knowledge?
it was supposed to be January 29th. And then again, I don't really know how to read stocks that well. So there's a lot of talk out there that they may have just doubled down and shorted against it again while trying to drive the price down.
Yep.
Um, And then there's, the opposite hand saying, well, no, they've already, at least the mainstream media and CNBC is saying, well, no, they've covered their shorts. So, it's over. Like, so we'll find out. I mean, that's the way it is. But whether they like it or not, it's kind of undeniable that, it's out there now. A lot of people are aware of it. A lot of people are aware of what happened. They're going to have to, Robinhood and some of these other apps are going to have to answer for why they halted trading.
Right.
And a lot of Americans now that normally wouldn't pay any attention to it suddenly have a contextualized example of how the market can be rigged
Right.
against the average person.
Right, because with the pandemic going on, they're always saying, "Oh, the what they say, the market, not the market. They're judging. Oh, economy. They're judging the economy. The economy is doing good. The economy is going to do, but they're judging the economy on the stock market, not on what's really going on in the streets. And that's what I find. At least that's my opinion, based on what I'm hearing. It's like whenever somebody's saying, "Oh, the economy is doing great,"
Right.
where are you basing this off of?
Right.
Off
Well,
what?
that's a perfect example. And as an overall piece, I definitely think the pandemic has kind of allowed Americans to see that the stock market has become detached from reality.
Right.
Like that the whole idea of investment and speculation is supposed to be based in reality for what's going to happen, and the stock market is no longer doing that because reality, like you said, on the street level, is not good for a lot of Americans, a lot of businesses. So why would you bet that it's going to be great tomorrow?
Right.
Right now, especially from a higher level view, just given the fact that up until very recently there wasn't even a vaccine. I mean, yeah, you kind of knew we were going to work for one, but you bet in the future for over like a year at this point that it would just go, it would just happen.
Right.
But when? How many companies are going to be left? So yeah, it's completely detached, and this. This is kind of an example. I mean, there's really no better example of detachment from reality than GameStop stock being worth 500 a share
Right.
in the middle of a pandemic,
When you buy
simply
a
because
game,
Wall Street,
when you buy your game, it costs
right?
you depending on the game, anywhere between $50 to $100 if you get the physical game. You go to GameStop, they're giving you $5
They taught us
if
though. They
you're
taught us,
lucky, and then you take it, bitch.
right? But that's what they taught us. You got to buy it high, you can sell it low.
Yeah.
They taught us that.
Yeah. 40s and 9s. Oh, that's my favorite stuff. Hey, I'm gonna go in here and get me a malt liquor Slurpee. Run across the street and get me some barbecue potato chips. Ooh, can I keep the change? Hell no, fool. That's a $10 food stamp. Better bring back my change.